afternoon, and welcome to the Red River Farm Network Issues and Events Center once again here. Each afternoon at this time, we will focus on markets, and today our guest analysts are Betsy Jensen with Farm Business Management instructor with Northland College, also Jerry Gulke down there with the Gulke Group, and Brett Elke of Innovis Agra. So to get things started here today, first of all, want to encourage anybody to ask questions if you have them. We certainly welcome questions here. We've got some microphones running around. And you know what? It's always fun to see them setting up extra chairs. We like to see that as well. So yeah, again, just if you've got a question, don't be afraid to raise your hand and we'll get a microphone to you. First of all, we had the USDA crop report out today at 11 o'clock. Let's talk reactions to those numbers.
I asked Brett earlier, I said, with USDA's numbers again today, does anybody trust USDA anymore?
Well, yeah, I mean, to me, it's, you use the word analyst, right? So let's take that word and break it apart. We know what the first part means, right? That yist means to pull from. So I texted a friend of mine who works for FSA, and I said, does NASS use FSA numbers or do they just make them up? And in terms of acreage. And they do use some of FSA's data, but they also use survey data along with that. So I would expect that the planted acres are probably fairly accurate. I question whether or not the harvested acres will be that accurate because we've seen some really disappointing corn silage yields, which means they've had to utilize more acres to make livestock feed than they would have in the past in a lot of key areas. So that's going to have some impact, but I think the biggest factor is going to be what's that overall yield going to be? Because I still think they're a little bit overly optimistic. I don't know what the rest of the panelists think.
No, I do think they're overly optimistic as well, but I also farm, and I know I have a bias. I love wheat, okay? You guys probably know I got the grain exchange table on my farm. I'm like all in on wheat, okay? And wow, wheat, like wasn't that impressive today? Like it's just blowing by everything else and saying to heck with corn and soybeans, we're gonna go higher from here. And that was, to me, really reassuring to see. We've had a pretty bad basis. Our spread between Chicago and Minneapolis is really wide. There's a lot of things that make me pretty nervous in wheat. And I was really reassured by the numbers today. World stocks are surprisingly tight for wheat. And I think today was kind of a wake-up call that we're okay on stocks. We're not super tight, but there is a little bit of concern out there, especially if we're going to start feeding some wheat. You know, we got down to the points where maybe we're feeding some of it as well. So I don't know that I'm ready to say that there's a bottom in wheat yet, but I was pretty reassured by the markets today.
Yeah, I think we have to think about and understand how WASDE and NASS in particular performs their surveys. And they take a farmer survey and they take an aerial survey of how good it looks from the air, and then they also take their own that they've talked to farmers previously in August, and then they come back in September and saying, well, now that a month has passed, how is it? And
I think it's you.
I'll just keep my head. I can't keep my mouth shut, but I can keep my. But anyway, I had the occasion, privilege once a meeting with NASS after one of the reports in WASDE, and their comment was, we try to perform a function that tells the market, tell you what we absolutely can see, not what we perceive or what we speculate may happen. He said, that's your job. He said, we give the results as we see it. The other thing, if you look at a WASDE report, it'd be good to read it sometime, because at the very end it talks about protocol and methodology and how they do that. And they take all that information, when it's all said and done, they say, however, now that we've got Jerry and his friends' data, we take a look at it and say, how does this compare with historical norms, our models that we have, and then they massage. It's about a 20-25% personal factor that they put to it to say, yeah, but they says that, but in the past, Jerry, it was always negative and you always grew a crop or whatever. So they come in and they massage that until the absolute final data, you know, that they can realize once we've harvested a lot more. And I think in this case, there are models out there that could show what happened to us in May and June with the hot weather. especially in Illinois, where I farm also. We had problems with the weather to the point where I thought the first time in 40 years I wouldn't have a corn crop. And we wondered how the uneven crop would be pollinating. Well, that unevenness that was late, that'll pollinate and it'll come back. It'll make a cob again. Well, when it did finally pollinate, we went out there and looked and gave it a chance to perform. It didn't come back as good as as the rest of it did. So there's unevenness out there within the fields. We could find a spot with 200 bushel corn and some that's 140. So we'll probably see this happen when finalized when in January's report, when they finally get enough data. And after that is done, we'll have sold corn now for 30 cents a bushel less than it's worth, and beans maybe $1 less, until we finally find out that the crop wasn't as good as they thought. But so in the meantime, it's speculation then and how we view it.
We're going to switch your mic out, Jerry.
Okay.
While they're doing that, let's talk a little bit about crop insurance, because after today's report, the probability of having a larger crop insurance check is probably considerably higher than what it was previously. And I think, not necessarily in wheat, because I think most people had a reasonably good wheat crop, but we're going to see some areas where we have average to below average corn and soybean yields. And if we're $1 to $1.25 lower on our harvest price on corn, we're going to have some significant crop insurance checks that are going to come into play.
When we're talking about risk management, I'm not a crop insurance agent, but next year, I would encourage everyone to look at an SCO coverage policy. I do like SCO. I took it on our own farm. It's a painful bill to see, but it does cover me. It gives me more of a broader coverage. So, and I know you can overinsure yourself as well, but SCO is something that's going to pay when the county has a poor crop, if your area has a bad crop, or if the prices go down. So I'm not an agent. I won't sell you the policy, but I would suggest asking your agent about the SCO policies for next year. And I think this year we could see some very large payouts from those policies.
I make a comment. One thing we don't think about is that you're in an area now where you're going to get insurance indemnity, and now that becomes a risk on your part that goes away. And you're assuming, or we may assume, that the crop's going to stay low and stay that way till we're all done harvesting. We're all going to get our insurance payment, and then the price will go back up again. By the 15th of October, you've got enough data that'll tell you pretty much what your average is going to be. After that insurance is over, two things: you don't have any place to hide anymore. You don't have to say, well, insurance is going to protect me from here. Your biggest fear, once we get the price lower in price management, is how do I protect my payment that I have already? And I've heard guys analysts on the radio saying, well, you don't have anything to worry about, just let it go, because you got money to lose in here. That's not why we're farming, to lose money that's on the table. So back in the pick years, and not pick years, but the LDP payments and so forth, we had spreadsheets as long as a room trying to figure out how we were going to keep that 30 or 40 cents that we were entitled to, for fear that something may happen and we turn around. We're not at $7 corn or $10 wheat or $17 beans. We're at low levels now where we will become competitive because the price came down. So the last thing that anybody out there is thinking about is markets going higher during harvest and afterwards. And they forget the fact that we came from up here and down here, and looking at the headwinds that we had 18 months ago. I wrote about it in Top Producer and DTN, that the headwinds that eventually we could probably see 450 corn. I didn't think it happened quite this soon. I thought maybe in November. But now we're there, so we have a whole different situation now with cheap prices than we had 18 months ago, when it lasted for about a month when Ukraine had their problems.
So how do we hedge that crop insurance, Jerry? Because that's one of the things we've been talking about internally in our group is, all right, so it looks like we're going to have an opportunity if these prices stay where they're at through the month of October. But let's say they start going up. How do we protect that crop insurance payment utilizing either futures or options or a combination of those things?
Well, it's based on the December futures in corn, for instance, in November. So you probably have to turn around and just force yourself to buy futures at a low level and say, I ask myself, would I plant corn here? Probably not. I would, because I have no choice, but this is not a place that I'd want to sell grain at $4.50 or $4.80, because in my instance, that's under $4 a bushel of corn. I can stand it, but there are a lot of neighbors of mine that can't, because they didn't ever pencil that into $400 and $500 an acre rent in Illinois. So I prefer to use futures. I'm not gonna risk the whole farm on buying some back, but you buy some, and assuming that you made cash contracts
Right.
back that we're headed. So I use the philosophy that when it comes time to planting, I'm 40% sold in grain. If it gives me the opportunity to do that, I will hedge probably another 40% and probably 20%. You cast it to the wind and say, I'll worry about that after I've harvested. And there's years I haven't only got 80% as well. So I think I like using, I don't like selling cash grain and buying a call because I'm going to pay for a price. So when you buy it, well, a broker will come to you and say, well, corn is $4.80. You know, if it goes to $5, you probably want to own it. Well, what's a $5 call going to be for March if you re-own it? All of a sudden, corn's got to go up 50 cents a bushel before you can make any money.
Right.
Why do it in the first place? If you don't have an outlook that says you're not going to get to 50 cents, you might get 30 cents more. Yeah, that's where an outlook comes into. Just because you're holding it doesn't mean it's going to go up.
The cash market, then, what do we do with this crop? Do we sell it? Do we hold it?
How much is left to sell?
So, I mean, soybeans right now, their carrying charge is minimal, okay? It's not terrible to sell soybeans at harvest. Selling wheat today kind of is the end of the world. You're gonna get, 70, 80 cents more for a March delivery today because of the futures and improvement in the basis. So if you can find somewhere to put wheat, you absolutely have to store wheat. Corn, kind of the same thing. I would really recommend putting corn in. I think it's about a, 35, 40 cent carry in cash market to March, which to me, I mean, I know interest rates have gone up, but that's still gonna cover your costs. One of the concerns I have with quite a few farmers now, we had low expectations for spring wheat yields. You know, spring wheat harvest is done. We had very low expectations. We were very dry. Things didn't look good, and the crop came in larger than we expected, which is a wonderful problem to have, right? We should always have that problem that we have extra bushels, and they had to deliver those extra bushels, and now they want to re-own them. Whoa. You already have your bins full of wheat. We don't need to hit the top on 100%. The list of guys that I have to call me when it's time to re-own is very high, and I'm not making any phone calls. So, guys, if you ask to be on that list, you will not get a phone call from me. So, I mean, your bins are already full. Congratulations on selling your overrun, but I think we just have to let those bushels go.
You mentioned interest rates a little bit here, and that's kind of, I mean, they're much higher than they were this time last year. How is that impacting decisions that are being made here this fall and the outlook here?
I'm going to say that it's not, because nobody has paid them yet. I feel like farmers don't have a good handle on what their interest rates are. I really think that they're going to be surprised when I go into their farms, we do some tax planning, and I say, oh, what's your accrued interest on your line of credit? And then we look it up on the bank, and then they fall off their chair, I think is what's going to happen, because I don't think that we haven't physically written out a check for those higher interest rates yet. And until that happens, I don't know that they'll appreciate how much higher. Now log into your bank, see what your line of credit was a year ago versus today, or I just don't know that they've been realized yet, because we haven't actually written the check for them.
And it isn't just that percentage rate either, because we've pushed ahead enough income and we've prepaid for enough expenses that nobody's going broke this year. So as we start to see credit expand, because we're going to try to manage our taxes, right?
Yep.
We want to make sure we don't pay Uncle Sam anything. So we're going to not pay that operating line off, or we're going to use more of that operating line before the first of the year so that we can take advantage of some tax management strategies. Now, all of a sudden, I've got an increasing volume of capital that I'm needing, and I'm probably paying twice what I was 3 years ago for operating line interest rates.
Yep.
And that's going to be the wake-up call, I think, on a lot of these folks, and that is you start looking at $40, $45, $50 per acre of interest cost for short and intermediate term credit. Now, all of a sudden, that becomes a lot bigger number or a lot higher percentage of our overall cost of production.
I think what hit for me a couple years ago, I sold some grain in February or something, and I kind of waited and never got the check. So I called and I said, hey, I never got a check. Oh, well, you didn't say you wanted the check. I said, well, it's February. Oh, a lot of guys don't even want the check. Oh, okay. Well, I am not, I'm not in a position to start deferring grain from February. But I mean, you have, in my area now, you have to tell the elevator, regardless of what time of the year it is,
Yep.
I would like to sell that corn and please send me the check, or else they don't, because a lot of farmers are deferring. I mean, I work with quite a few that have very large accounts receivable deferred payments that they have on their balance
And
sheet.
they've paid for all of next year's expenses
Yeah.
in addition to that, which
Yep.
is what I'm getting at.
Yep.
That's been pushed ahead, and now that we're at these considerably lower price levels and higher interest costs and higher capital requirements, that's gonna shift. And over the next year or however long it takes for this correction to last, we're gonna start to see, I think, some more challenges in terms of financial management on a lot of these growers.
Yeah, is that more of an equity deterioration then?
Yeah, and just to, I mean, even something as simple, we got, how many seed salesmen around this area? They haven't changed their prepayment discounts. You know, those are still staying the same. And so I did send out like just a simple Excel spreadsheet to my farmers. This is what the discount you will need if you're borrowing the money at whatever, 8.5, 9, whatever your interest rate is. This 6% interest discount isn't cutting it anymore. You're actually losing money. So it's,
I think you hit on something in that somebody mentioned capital, cash flow wise. It's going to take, if you're going to make a payment on a John Deere tractor or international, whatever, similar to what a person that buys a home and works for a living in town and gets a paycheck, he's got to pay for that capital expense, that payment on that house or on machinery or land with after-tax income. So you've got to generate some income so you got some cash flow at the end now to pay for the high capital equipment and land payments that are there. And that's what kind of hurt us in 2000 or in the 1980s. We had high price land and we had to make capital payments on it. So interest rates and taxes, real estate taxes, that's all deductible. That's 1-to-1. I can cover that. And whether it's 7% or 9%, you can plan for that. But a capital payment is kind of looms in the background that not only for farmers, but for our general economy as well.
yep.
Let's throw fertilizer to the mix, fertilizer and fuel prices.
Well, fortunately, fertilizer prices are going to be significantly lower for corn and wheat this year compared to what most people paid last year. I'm estimating 50 cents a bushel reduced cost on corn based on the fertilizer price drop. Wheat, you'll have to help me out on that one, Betsy, but it's going to be a significant impact to the positive in terms of overall cost. Fuel prices, I mean, they're higher than what they have been, but how much fuel do we burn per acre? Actually, the fuel cost of getting stuff to us and our product to market probably has as much or more impact than the actual fuel that we use on the farm.
If you want to do a really personal exercise and the only way to learn is to do it yourself, and that's make a spreadsheet. And I did that a couple of years ago because I'm guilty of it. And I put every item that I had on there that I complained about. I complained about the cost of farm service, whomever would charge me to spray my land. At that time it was $5.50, now it's up to $7. I put that in there and they said, all right, how much is my fertilizer? How much is my rent? And then what happened to the price of my grain in the meantime while I said, well, I didn't want to sell anything I didn't have or something. Well, all of a sudden I looked at it and said, I'm complaining and bitching about basically something that is 2% of my total cost of production. I'm majoring on minors. I need to focus on something else. And that's why we went into marketing years ago. You can lose $1 a bushel on corn. That's $200 an acre in Illinois or $180 an acre in it nationally. That's okay because you can't win them all. And we got an excuse for that. But, that covers a lot of sins when it comes to charging me whatever you want for fuel, and I can even pay the rent. If you take a look at what wheat was and corn was now, and wheat's at the lowest price it's been in, well, they wiped out the whole year's gain.
It did.
So
Yep.
I think, we'll spend a lot of money worrying about these little things, but the big money goes out the door, and they may not come back again for a second chance.
If anybody has any questions, feel free to raise your hand. We'll get a microphone to you and ask the questions. A lot of times your questions are as good or better than mine, so.
I'm going to make
Yeah,
a
go
point because I dwelled on it all year long back when the war broke out in Ukraine. We all knew what happened. The price of wheat went up, price of corn and beans went up after that. And I looked at it and I thought, here we have the biggest major problem we've got maybe in supply orientation. We sink a ship in the Black Sea region and price of grain goes up and so forth. We all know what happened in Ukraine. Can't get the grain out, that's going to help us. It didn't. We went down from that point. What was interesting to me was that price that we drove wheat, corn, and soybeans, and crude oil for that matter, higher, never exceeded the highs we made in the drought of 2012. And I watched that like a hawk and said, okay, we learned something back in 2012. There's nothing you can do with $7 corn. There's nothing you can do with $17 beans except wait till they go lower. And wheat isn't worth $20 a bushel or whatever. And when it couldn't exceed that, in the worst case in my lifetime, something's wrong out here. Something's wrong in Denmark, so to speak. And that market turned there, and it gave you cell signals that were obvious that said, I don't care what you think you're going to do with your crop. We couldn't use it if you grew it. If you couldn't grow it, we can't use it. And there's nothing you can do with that price. You can't feed it to animals, and you can't make ethanol out of it in corn. And the price went down consistently for 18 months now. If you look at a long-term chart, a monthly chart, we're down to levels now to where we started before breakout to the upside. So the Fed chairman talks about resetting the economy. We got to reset things, and we saw that as resetting agriculture. Agriculture's been there first. We've reset agriculture back to doggone near zero, to where we don't care what happens in Ukraine anymore. And if you look at wheat production globally, we in the United States are a small fish in a big pond. Europe provides more. Russia is a big wheat producer. We don't need Ukraine wheat. We don't need to ship it. And if we do, that's a bearish factor on us. So when you see something like that happens, you ask yourself, when bad things happen to prices, when there's good things out there, what am I missing? And my biggest fear of this whole thing is, and we saw the prices go down today, and we have tight stocks, as we mentioned. I've always felt our economy is in worse shape than what the CNBC wants to tell us. Maybe I'm too old. I went through this before a couple times. I can know what happens. And the guys that are running the show are old people. They're not young guys. Maybe we need to replace them. Their whole focus is we got to cut labor costs down. And if we do that, you're going to create a recession somewhere down the road to do that. Agriculture is reset, basically taken the price higher and lost it all in 1 year. And, kind of predicting the future now is pretty easy. We're either going to go sideways until somebody doesn't have a crop, or we're missing something and we're now competitive again in the world and we're going to use more. But to me, the worst is over. It's pretty easy to make a marketing decision when corn is $4 a bushel on my farm when it was 7.5, just last year.
You've kind of touched on it a little bit here, but we've heard a lot of headlines about Ukraine, Russia, that conflict over there. But we've heard it also here. It's not having a huge impact on our markets here. Why is that? And dive into that a little bit more.
Well, Ukraine, just happened to have the numbers. Ukraine last year did 33 million metric tons 2 years ago. Then last year in the 22-23, they produced 21 million. Russia, in the meantime, went from 75 million metric tons production to 92. 17 million more. Ukraine was 12 million less. Russia produced more than Ukraine lost in the whole battle. What do you think would have happened to prices if we hadn't had the war? You wouldn't have had the opportunities you had in 2012. So the market's whole job is to try to discover a price commensurate with the amount of supply that you have and then the perceived demand that you have currently or may have down the road. That's what brought the prices down. The demand was never there to sustain those higher prices. And if we ever solve the problem with Ukraine, and I think they probably will eventually, now you got another problem. Now you just added another, and then again, what happens next year if they do ship more? And you can take a look at soybeans. You can look what happened to Argentina with soybeans. We don't want them to have a big crop again. And Brazil has already blew us out of the water when it comes to corn. They're competitive with us all the way into next year again already. So it's going to be a tough road to hoe if we can't get NASS to realize we got a crop below 170 bushels an acre nationally.
How much of this market is being, what I would call like index fund or fund-driven, outside money?
Funds probably, but also the one that bothers me is the algorithm guys that come in, and if you want to do another exercise, if you have somebody that has a chart or your broker give you a 1 minute tick, go in there today and look what happened at 11 to 11:01. The range that's in there is wide. It's unbelievable. So if you were a speculator on the side and said, well, if corn is up a dime or up 4 or 5 cents, as soon as the report comes out, it must be bullish, so I'm going to put a buy stop. I want to own grain if it does this. I want to own if it does this and goes down. It did like this in about a minute, and it wiped everybody out. So the global traders I know that have been around a long time, they're scared of it. If they make $1, they take it on the upside and on the downside. And one guy told me, he says, you guys determine the direction and the trend. He says, I'll take half a pie with a lot more confidence. I'm not going to step in front of this thing. The algorithm guys who trade in milliseconds less have really distorted things a lot, and we don't look at it, we don't investigate it.
And it's computers trading with computers. It's not even
Yeah,
people.
right. Not even people.
It's not even people. So that's a challenge.
But they also swing it too high too, though.
Oh, absolutely. I'm
Okay,
not saying
so
they
let's
don't.
not, I mean,
No,
it's
It's
huge
the volatility.
swings.
It's the volatility
Yeah.
that creates that
Right.
blowout stuff where you got to stay in front of that moving train. Once that direction is established, then we can step back in and either become hedgers again,
Yep.
or if we want to do some side money stuff,
Exactly.
then it becomes a little bit safer. But boy, it's dangerous to be in on a report day.
Oh, I agree. Very dangerous. And I mean, if you think about the past maybe 3 years, we've seen we used to think like a 5-cent move in corn was a lot. I mean, I remember those days. Ooh, corn moved 5. That was exciting. Now it moves 5 cents. I mean, a 5-cent move isn't anything you even sneeze at anymore.
Yeah, I can remember back when I was a kid, I think corn moved 12 cents the entire year.
Yeah, exactly. No, spring wheat, I think, had a 40-cent range for like 4 years in a row.
So have we had a new paradigm shift to where this is the norm now? We're going to have to live with this?
I think so. I mean,
Actually, if you put it on a percentage basis, which we added to all of our spreadsheets, the percentage price change, it
Yeah.
hasn't changed a great deal.
okay, yeah, I
The
never thought about that.
percentage price change is the same. It's just different than what we're accustomed to
Yeah.
going back to either the 80s, Jerry, or the 2000s. It's, if you look at the percentages, with the exception of years where we have a production insult, like 2012, where we'll blow things apart, or when we have the craziness that happened in spring wheat in 2008,
Yeah.
you take those out of the equation, that percentage price change over the course of a year is pretty similar to what it was back in the times when corn moved 12 cents. What percentage is 12 cents of $1.70 corn? What percentage of $6 corn? It's the same. The price change is the same.
Well, that brings up a point we've got to decide as producers, and we've gone away from hedging and gone more to hedge to arrives. And if you ever calculate what an elevator charges you to do that, you're paying a lot of commission.
Oh, absolutely. Yeah.
Absolutely.
But you don't have to come up with the money, and I don't have to worry about it and so forth. There's an open area out there in marketing that we had and we lost and become complacent, I guess, thinking we don't need to do it. And at some point in time, we can invest $500,000 in a tractor, but we can't invest $200,000 in a hedge account. And that'll make you a whole lot more money, perhaps, or save more at some point in time. And of course, nobody likes to make margin calls, but I've always paid more income tax when I made margin calls than when I didn't. And I'm not here to tell you it's easy, but it may become necessary.
Well,
it is
and
gut
actually,
tightening sometimes.
when we were worried about growing enough and still wanting to market into the rally this spring, I told a lot of my growers, I said, what's your worst case scenario? And we'll use hedge to rise up to that point, then we'll switch to futures. Because they're not delivery obligated, and if I don't grow that, I don't have to pay that nasty non-delivery penalty that's on the backside of that contract that none of you all read. 40 cents a bushel in a lot of cases. We can roll it out to next year. What if there's a price inversion? I mean, so understand, A, the contract that you're signing, and B, understand the costs that are associated with those contracts.
Is there a way to get to the farmer to make them understand they need a team approach on this marketing, like a marketing strategy like that? Is there a way to do that?
It'll be a lot easier now the prices have dropped.
Yeah.
Yep, it was a lot easier before when you didn't forward contract and you hit the jackpot at harvest and life was good. But I mean, marketing's got to be about risk management, and I think we've forgotten that over the past couple of years, because there's nothing worse than selling, forward contracting wheat for 9, and then when you deliver, it's 11. I mean, I know that's hard. It's hard, but I was happy with 9, and I was even happier with 11. So risk management has to play a role in this, and I think a lot of farmers have forgotten about that.
It's the market psychology that drives you nuts, probably in the
Yeah.
meantime when prices are volatile like that. And there are ways of reducing the odds of being wrong. And when you enter into something like that, in anything perhaps, but marketing especially, you're going to make mistakes. You just don't want to make big ones.
No, exactly.
Because you can't recover from them.
Jerry, you're farming both in Illinois and then even here in North Dakota, right?
Well, I have interest in North Dakota because we rent the farm out in Dixie County. But
Are you seeing similar situations as far as crop variability?
I was surprised to look at the corn and beans up here and at my son-in-law's farm near Minot. The corn was, I wish I had ears as big as his but the population is less. But the crop looked better. It withstood some of the droughts better than I thought. And I don't think you got that heat in Memorial Day when we were 95% humidity and 95 degrees. I mean, no, I couldn't breathe, let alone the corn. So we hurt the crop. But we saw barren ears or some tip back even up here, not near as much as we do down there. I found ears going through neighbors' crops, of course, that some ears didn't even have kernels on them. And I'd never seen that in farming in Illinois in 40 years. Usually you had something, We had completely barren ears.
How did the derecho impact the crop in Illinois? Did that corn come back up in time to pollinate decently? You had that derecho in very early July when the corn was still pliable.
Yeah, in Illinois it did. It was small enough to where it came up, and I'm sure there's some problems with the leaning, but we're used to driving one way. Go down the road, especially if they've got 12-year-old combines. Go down a road here and come back in India or trade it off because the transmission's.
So talking rainfall, crop variability, we're seeing some issues with Mississippi River levels again. What implications does that have as we get into kind of a crucial time period for that here this fall?
I was on a seminar like this in Farm Progress Show. Head of the water department or navigational system for Illinois was there. He said, our groundwaters are so, we don't have the groundwater. We have to replenish the groundwater first along the Mississippi River in order to get the runoff. He said, we could be plagued with this crop for all winter long before that happens. The guys in Brazil, I got an email from a friend in Brazil that farms. He said, so how bad is this, Jerry? He said, will you be able to export any beans out of the Mississippi River? So they're watching it like a hawk because they know if we can't, then somebody's going to have to go to them. It's a serious situation, but again, it comes back to the farmer. Our basis is already, I think I'm 55 cents under for fall delivery on beans. Corn is more locally if you have an ethanol plant. But soybeans got hurt really bad quickly.
What's your normal basis for soybeans?
35.
Okay.
So we pay the bill. The farmer ends up paying the bill.
Well, and you had that problem last year because one of the areas that I watch in terms of cash prices is the Alton Grain Terminal. And for a while last winter, Alton, which historically has a considerably wider basis than the river, was actually higher priced, had a narrower basis than they did on the river in Illinois.
Yeah, then that's going P&W, right?
Yes.
From Alton?
Yep.
Yeah, so in the world of karma, we got nailed when we had the Chinese tariffs, right? 2017? In the Northern Plains, we took it in the shorts. Now, we don't have to, up here, we don't worry about the river so much because very little of our stuff goes out the river. We're more worried about the ability to send it west. So we had our years of hardship when it came to basis, but I think the river levels won't be a huge impact for our cash farmers here.
Not up here.
No.
So you talked about yield variability. On the way up here today, one of the growers that I work with was going to do some custom combining on a field of soybeans just north of Norcross. And I sent him a text before we came up here to find out what the yield monitor said. So with who is it? Who's got the, anyway, You can't answer this because I already told you. What do you guys think the yield monitor said in Norcross on some drought-stressed soybeans?
15 bushels.
47.
12.9.
I was way out. I was hoping for like a happy
You were,
ending.
yeah, the happy ending's not going to occur in that particular area.
We got an email from a client east of Huron, I believe, and I thought it was a pretty good crop there. He did 3 quarters, and he averaged 16 bushel an acre.
Yeah.
I know Aberdeen got more rain than they did, but it was spot, that shows how spotty it was.
Well, and that's the point I'm trying to make, and what you're verifying, Jerry, is we're going to have some incredible yield variability across the country, and that's where I think that NASS is wrong on their yields. They're not tickets of grain production, oilseed production, that we're going to have substandard yields. And that includes some key states like Iowa, where there's going to be some pretty big yield variability there as well.
What's the problem with, I call it veggie diesel, biodiesel, and you take a look at palm oil, and take a look at canola, and take a look at bean oil. It's as if that industry doesn't exist. And that gets back to my standpoint, when bad things happen to good markets, what's out there that we don't see that's coming that is blindside us, that so far we've missed it. Now maybe we're 3 years too soon.
Right.
I don't know.
Well, we've got a crush plant coming online this fall at Spiritwood,
Yep.
Yeah, they're running now, I think.
but they're advertising for beans now.
And do you think part of that, I know there were a lot of people kind of surprised by fuel regulations and fuel standards here that came out earlier this year. Is that playing into that, do you think?
Oh, I don't know. You're talking about, we'll bring up a fun market. We're going to remind these guys. I know some of them are out there. Sunflowers last year. What were prices at harvest? What, like 35 probably? Anyone have sunflowers last year? And then you held them, and then you sold them for what, 18, 19, I think? I mean, that was a horrible thing that happened last year in sunflowers and some of these specialty crops. So just, if you guys have some specialty crops, just keep your eyes on them, okay? So a lot of my guys had sunflowers last year, and they said, well, just for fun, could you change the sunflowers to 35 and see what it would have been? I'm like, no, that's not gonna be fun. We do not want to see that number had you sold them all at harvest, all right? They're only worth, I think it was 18 or 19 by the time the dust settled. There was a pretty short window that you could deliver them at harvest. But I know up here in the Northern Plains, we got lots of specialty crops, and just be aware of how quickly those markets can turn.
Any questions from the audience?
What about farmland? Don't we want to touch that at all?
Yeah. Yeah, what are you seeing for farmland, Jerry?
I'm probably not, I guess, 2 things. If you got the cash and you got to get rid of the money, then that's one thing. But if you don't, and you put money down and you got to borrow the rest, I look at it as an investor saying, which would I rather have? 5% T-bill or a CD on 12,000 acre Illinois land that gives me $600 an acre profit, or buy it and try to rent it out for $400 an acre next year. That may not happen. So a lot of us have seen that before. It doesn't last forever, but you would think you're going to have a reset thing in an agriculture. You got to come back to reality. Somewhere in here is a happy medium, and I don't see interest rates falling again back to zero. That we had plenty of time to finance a lot of stuff back then for free. Those days are over. So it may be more of a return on investment type of thing. There's only so much money an outside investor will have, and right now it's been farming, but next year can change that. You may not have near the cash flow you had last year. I'm just hoping, and I didn't get trapped, but I said I would never pay that much for land, but I did. I paid $70-some hundred an acre for farmland, and 3 years later it's worth 12. I'm just hoping the setback will take me back to what I paid for it, not 3 years ago, not yesterday. And we'll see that happen again.
I know you talked interest rates a little bit, maybe not having as much of an impact here this fall in input decisions, but talking land prices, is that something that's gonna maybe plateau that market a little bit, or what do you see happening there then as far as
Yeah.
interest rates are concerned.
One way to tell is to ask your banker how much you'll loan on farmland. And then if he says, well, you put the first 30% down, we'll finance the rest, that implies that I think somewhere out there, I might have the opportunity of you may lose a 30% on your land, and after that, it's probably a good buy. The last time somebody said that farmland was a good buy, why, that was in 1982, I bought $3,000 an acre land. And it was goodbye farm, goodbye house, goodbye car. It was 20 years before the land ever got back up to where I paid for it. And it went through it so fast, I didn't have a time to sell the land.
Right.
It just blew through it once it was there. But you spend all that time building a base globally, and that's kind of what it's all about. You know, you build a base under it, and eventually, we're seeing that in some of the, you go back and take some charts on wheat and stuff and go back a long time and look and see, when did wheat finally break out? When did I think wheat actually broke out long before we entered into Ukraine. It had broke out of a 6 or 7 year trend. So did corn. And soybean's a different animal. I think that soybean oil thing is still in the mix. In the back of people's minds, there'll come a day, and I guess at $14 beans, I don't want any in my farm, but at $12, I'd probably hold them.
You know, the NDSU puts out their monthly By the Numbers newsletter, if you've read that, and they had a good farmland article, so you can find that one online, but it talked about it used to be 5% of the value, and then 4%, and now we're getting down to the 3%. I mean, rental rates have not gone up with farmland. Farmers just aren't willing to pay. Farmland prices have gone up more than rental rates. And so to me, that's kind of a limiting factor too. If you're an outside investor looking to do something, like you want a 3% annual return, now you hope the land appreciates as well, but you know, a 3% return back when interest rates were rock bottom was safe. They're not, you know, you can do better somewhere else now. So I thought the NDSU article was pretty interesting. But when I have farmers that are looking to buy land, okay, no one's ever gotten a deal on farmland. No one ever looks at something and says, heck yeah, what a deal. You know, we're not in this for the short run. You know, you're buying it today. Do you think it's going to be worth more in 20 years? Can we afford to make the payments? Can we cash flow it? Don't ever get into farmland thinking that you're going to get a deal on it. It's just, I don't think you're never going to have that mentality. So
I always view farmland as the purchase of farmland as a separate decision from the operation, because that is a different class of assets
yes.
than what farmers are accustomed to. So that's a completely different, and you hit it. Can you, A, come up with a down payment, B, can you cash flow it and make it work within the structure of your operation? It's because it's always too high priced when you initially buy it.
I will jump in here. If you guys are in Minnesota, the Minnesota tax credit did change this year, and it can be a direct line descendant now. So if a father, grandfather sells to a son, the seller is eligible for a tax credit. That is only the seller, and the paperwork has to be in by November 1st. So just be aware that if you are doing any transition or estate planning and you want to sell a piece of land to one of your children or grandchildren, you now get a tax credit for it. So it's kind of a little nudge maybe to get the ground into the hands of someone who's going to be farming it.
Maybe that's going to be an alternative to inheritance tax, because, you know, those who don't know it, it basically drops significantly in 2 years. Was it 12.5 million per person now, I think?
I think so, yeah.
And it drops to 5.
Sunsets, yeah.
Yeah,
right.
it drops to 5. So all that inflation in land, you know, don't kid yourself. The Office of Management Budget looks out there and says, what's coming down the road that's going to help us? And we keep spending and so forth. Well, you've got land that's worth 5 times what you paid for it. They're going to want their money, or you're going to have to do something to get rid of it.
I have an odd question then, too. How does Farm Bill play into all this?
What?
How does the Farm Bill play into this?
I don't know that the Farm Bill has a huge impact on commodity prices right now. There's still so much unknown. I guess I don't even try to keep track of what the Farm Bill discussions are, because I think we're so far away from a Farm Bill that there's just nothing to really talk about.
I think they're hung up on a safety net, basically.
Yeah.
And right now, when you think about it, what you don't want to have happen is a large farmer start to sell farmland or give land back because he's broke or whatever. that's a catastrophic chain of, or a domino effect. And a bank now, can't take a 10,000 acre farm and have it dumped onto the market all of a sudden. And that's true in apartment houses in our economy. That hasn't come to roost yet, is what we're going to do with non-performing assets. Normally, you write them off quick. You sell them, get them off the books, get them gone. Farmland, it just start cascading. Just get out of the way and let it go lower. That could be a problem, but maybe we got too big to fail. It almost looks like it.
I watched The Big Short a couple weeks ago on a rainy day just to remind myself. If you guys haven't seen the movie or read the book,
You had a rainy day?
we did have a rainy day. It was wonderful. And I thought I need to watch The Big Short again just to remind me about the housing market. So it was a good 2-hour lesson in the housing market. Yeah.
I'm curious about the what the acreage mix is going to be.
I haven't heard anyone about 2024 yet. None of my guys have been looking at cash flows or anything for next year. And I don't know of any specialty crops that look hot out there right now. Like, I don't know that there's, like, we all have to plant flax or sunflowers or kidney beans. I haven't seen anything that looks outstanding at this time.
I'll tell you right now that most people in where I'm at, southern part of the valley, or much of Minnesota and into Iowa, they're going to keep a rotation that's not going to change dramatically. But when you start looking at these 24 corn futures, and you look at the reduction in the cost of fertilizer, and look at that whole scenario, I can sell futures right now pretty close to a break even for next year. So it isn't going to take a very significant rally in 24 futures where we can start making profitable hedges on corn. Soybeans, depending on what your corn to soybean yield ratio is and what your land cost per bushel of beans is, that's a much more challenging crop for us to cash flow in the northern plains. Okay, so.
The problem you have globally is that from a macro standpoint.
Want to grab this, Jerry?
Oh, sure. There we go. What you have globally is that you've got, if you want to look ahead and take this 2.2 billion bushel carry out, carry it into next year and grow another one, grow a decent crop in Argentina. Now you have you could get up to 3 billion bushel carryover in corn. So the market is right now looking at it saying, we've got 5 million acres of corn potentially planted for 2024 that we don't need. How do you incentivize you to not use that fertilizer and say, well, I'm going to roll the dice one more time and I'm going to try to raise corn for break even? They may solve that problem for you. It may not be break even at harvest. So we've got to get that moved and get it into soybean somehow, because if this soybean oil thing is good, as they say, and we get any kind of a hiccup in South America, you're going to want more bean acres than you have corn acres. And we saw this not happen this year. We found another 1 million acres of corn. My goodness, 94 million acres of corn and less soybeans at $14. What's it going to take to get rid of that corn acres and get it into beans or something else? And the market will incentivize you or disincentivize you to do that. And he's probably right. At $5 a bushel, depending on your cash flow, that may be worth a consideration. That may look pretty good in a year from now, barring Mother Nature again, of course, which didn't help us, I guess, this year yet.
I'm curious, the Chinese economy's been pretty dicey, but they've still been jumping into this market every once in a while, making some soybean purchases. How do you kind of see the lay of the land as we move forward with China being our big customer?
Well, they need to be a customer. This is the time when they buy. And that's why, if you notice, when they do a sale of 250,000 tons, the market goes down. And I often have said and written, boy, what would happen today if Mexico hadn't bought corn or China hadn't bought a token amount? They need to buy a lot more. And right now, the people that we talk to globally suggest that maybe the USDA is underestimating the demand by China by maybe 2 million metric tons. Well, we pick up the paper one day and Brazil raises their production 1 million metric tons, but it doesn't look like it's going to drop below 90 million metric tons, so maybe 92 will help us a little, but that's a long, drawn-out affair until you finally get rid of all our beans in South America. But that's a concern. I don't think they want their people to be hungry, but there's a lot of scholars out there that suggest that the private people aren't very happy over there.
Well, that's actually why I watched The Big Short. There's a headline that China's Lehman Brothers, the version of the Chinese Lehman Brothers, collapsed. And I thought, well, I better find this movie and rewatch it in, because I don't want, the book was too thick. I just wanted a 2-hour summary. And it is a little terrifying if China's economy falters. And guys will say, yeah, but they have to eat. Well, they do have to eat, but they don't have to eat the pork or, I mean, they can, and I think we've seen that here too with inflation. Like, we've all kind of made a few changes. I mean, I've gone to the grocery store to get something and then looked at the price and said, oh, well, it looks like the ground turkey is cheaper than the ground beef. I mean, we make those kinds of decisions and we choose a cheaper product, even in the US. Well, I can guarantee you China's going to be having to make those decisions as well.
The other day, we had a market that was, I had a market analyst tell me it was Apple-driven. There was a little bit of a spat between China and Apple with their iPhones. That they were concerned about that spilling over into the grain market if China gets upset with something and they're not going to buy.
We saw 2017. We know exactly what happens when China decides that they're unhappy. And I think President Biden the other day said, like, we want China to do well. I mean, whatever political disagreements we have with them, when their economy does well, our economy does well. I mean, we are intertwined with them. And so it was a little scary to think of the influence that could happen if their economy falters, if we get into a trade spat of some sort. We are very reliant on them.
So, talking about the election a little bit here for 2024, what kind of an impact do you see that possibly having here on commodity markets?
The one good thing we have in this United States, if you look at it, Montana, North Dakota, you go down from there all the way down. Every one of those lower populated states have 2 senators.
Yeah.
New York's got 2 senators. California and Illinois do. They're mad as blazes. They want to be it resident proportional. So if you want to get something done in your part of the country, you scratch my back, I'll scratch yours. That's the one ace in the hole we got in our whole political system, is that as long as we can keep a farmer-friendly senator and representative involved, we're probably fine. They'd probably just as soon write us a check and get us out of the way and then go on their merry way with it.
Thank you for finding something positive in our political system, Jerry. That was inspiring.
It's not good, but anybody that's bet against it, they say the last 350 years was wrong. So
Right.
there's got to be something in that.
Yep, I agree.
I think Jerry should run for president because he might be the youngest candidate that we have.
Yeah. Well, probably wouldn't be any worse. You know?
Do we have any questions from our audience out here? Raise your hand. We've got microphones walking around for any of our panelists.
Yeah, we thought we'd have this exciting stuff to talk about with the USDA report today, and it was kind of meh. I mean, it wasn't real exciting.
So, Jerry, I talked to you late last week, and you mentioned soybean conditions at the moment, and you were really expecting that yield to drop below 50 today. Of course, it didn't. Do you see that changing in the future? What happened there?
Well, my other son-in-law that works for me in Illinois for the company went through the WASI report and called me and says, may not make any difference, but I find this interesting. He said that the satellite imagery that they were taking and looking at the crops from the air, kind of like I did from the windshield, and said, boy, can't believe how green they are with no rain. They looked at the same thing. They quit looking in late August. The field surveys that they took from farmers were made in August. The walking in the fields that they did were made before Labor Day, and I thought they started Labor Day, and a lot of us did, and they continued beyond Labor Day and did it in that hot weather, and I thought, you're going to get an education you won't forget walking in those corn stalks at 100-degree heat and 95% humidity. They didn't get the benefit of looking at that and asking about it on September 10th, maybe. And also the farmers that were looking, that they re-interviewed. And when I was at the Farm Progress Show, there was a guy from NASS there, and he talked about how systematically they go through this. They asked the same farmers in September that they asked in August, what do you think now? And I thought, aha, If they aren't walking their fields, then we got a problem. But if they walk their fields, they got to see some of this. And apparently it didn't show up when they did that. So now we got that other wrinkle in the whole thing, is that how valid is that report that's coming out? And we'll kick the can down the road to October, and by that time, most of the harvest will be done, and then we'll move on from there. But I still go back to when I met with them 20 years ago. They said our job is to present the facts as we see them. We don't speculate on what's going on. That's your job. If you want to speculate, Jerry, be my guest, but we can only relate. And they're data-driven, kind of like the Fed is. So maybe we can look at the Federal Reserve and say, aha, these guys are behind by 30 days, you know.
Well, we're running out of time here to make room for our next panel, but let's give our market analysts a round of applause. Jerry Gulke with the Gulke Group, Betsy Jensen with